Hello everyone and welcome to Investing by the Books, a podcast by Redeye. I'm your host, Eddie Palmgren, and with me here in the studio is my friend and colleague Niklas. Today we are excited to speak to Moritz Sitte, who is the investor at Antheia AB, a private investment firm founded by Daniel Ek. Moritz has previously worked at Baillie Gifford as an investment manager in Edinburgh for 12 years. And today we will discuss a book with him. So Niklas, which one is it?
So Moritz has selected The Clock of the Long Now, written by Stuart Brand, and it's a piece of less than 200 pages and not at all a typical investing book, but it's a really timeless piece on how to think and act long term, or at least for the next 10,000 years. And we love the concept that the book conveys and are curious to learn more about Moritz's takeaways from it as an investor.
The Clock of the Long Now was published in 1999, and we are truly thrilled to speak about the book today. Here comes our conversation with Moritz Sitte. Hi Moritz, and welcome to Investing by the Books podcast.
Hello.
It's wonderful to have you on, and thank you for taking the time. And last time we met, it was here in Stockholm for our Serial Acquirers Conference. Where are we reaching you this time?
You are reaching me in sunny and hot Zurich, where I've been living for the last year or so.
Perfect. And to begin, can you tell our listeners about your early background and what led you into the world of investing?
Sure, absolutely. I'm originally hailing from Bavaria and studied there in my undergrad studies, did business administration. I was always interested in business from a very early age. And then after that, I thought I should go somewhere to learn how to speak English properly. And Edinburgh came up because I knew from having read various articles in business magazines as a teenager that they had a very interesting asset management industry there. And so that was definitely on the map for me. Did my postgrad at Edinburgh Uni, and then had the great fortune to join Baillie Gifford as an investment trainee. And I worked there for a total of 12 years, mainly focused on European equities, being a portfolio manager. If you ask me to describe Baillie Gifford as succinctly as possible, I would probably say that it's a partnership that's been around for over 100 years. And the ethos is really that the partners want to pass on the business in a better shape to the next generation. And I think that means that you can't do short-term stuff like gather assets at all costs, but you really have to focus on pursuing investment excellence. So in other words, I count myself incredibly lucky because it's an unusual place in the investment management industry in the best way possible. And it's been a great place for me to start my career and to be an apprentice. And nowadays, or for the last 2 years, I've been the investor at Antheia AB, which is a private investment firm founded by Daniel Ek. I do the research, I come up with the ideas, and then I propose investments to the board for them to make the final decision. I'd probably just add 2 more points. One is Antheia AB does not have any outside capital or third-party clients, which I think is a huge advantage for us. And secondly, Antheia AB is separate from Prima Materia, which was also co-founded by Daniel, and which seeks to partner with exceptional people and help them build companies that leverage technology to solve big problems in society. But why don't I stop here and let you guys and let me catch a breath.
Yeah, we'll go back to your current role, but the main focus for today's episode is, of course, the book you have chosen, which is The Clock of the Long Now. How did you first come across this book, and why have you chosen it for this episode?
It's a good question how I came across it. I think it was through the podcast series of the Long Now Foundation. So the book is really a collection of essays on long-term thinking. And it was compiled by Stuart Brand, who's one of the co-founders of the Long Now Foundation, which seeks to promote long-term decision-making, long-term thinking in society. And they also run this wonderful podcast called, I think, Seminars on Long-Term Thinking by the Long Now Foundation, where they invite speakers to really talk about long-term topics. And then I read the book, and I was really keen to choose it for this podcast because I found it super helpful in reframing my mind on some of these topics. And secondly, I think long-term thinking is such a profound prerequisite for any type of enduring outside success, be it in business, investing, elsewhere, that I think you can never talk enough about it.
And this really isn't a typical investment title. So just for our listeners to understand a bit more, what is the purpose of the book and what are they actually setting out to do?
Yeah, I think the real the idea of the book, I guess the authors of the essays, as well as the foundation, is really that, as I said, they want to promote long-term thinking, and the sort of crucial question, the key question that they're grappling with in these essays is really, how do you make long-term thinking automatic and common instead of difficult and rare? And what are the sort of steps that you could undertake? How do we have to think about our institutions or decision-making in general, and the systems upon which our society is based? And this title with the clock specifically refers to a project that the Long Now Foundation is undertaking, which is to build a clock that can last for 10,000 years. And almost as a symbol, as a point of rallying around this symbol of long-term thinking. Because when you start with that, then you have to think, what materials are we using? How is the clock to be powered, etc. And it's a fun physical manifestation, I guess, of this idea of really embedding long-term thinking in society.
So the author of The Clock of the Long Now is Stuart Brand. Can you tell us a bit about him?
Sure. I think he's a fascinating guy. He was, I think he was an activist. He was an author. He also compiled I think it's called the Whole Earth Catalog. And that was also then an inspiration for Steve Jobs, if I'm not mistaken. This idea of, I think they always ended the Whole Earth Catalog with "Stay hungry, stay foolish," or something like that. So I think he was a super interesting, eclectic person with many different interests. There's actually a biography on Stuart Brand. The name escapes me, but it's at home. I need to read it, but it's meant to be very good. He also did a lot with indigenous communities, and I think right now he's amongst other things trying to bring back the mammoth to Earth and so on. So I think he's got a lot of these things that then tie in with this idea of a long-term perspective, which is obviously very interesting.
Yeah, one of my colleagues looked him up, and there's a long list of his bio on one of the pages that they have. He's born in 1938, so he's done a lot. And my colleague was like, "What has this guy not done? He's been doing so much." And I'm sure that many of our listeners are familiar with the bet that Warren Buffett did, this 10-year bet against Protégé Partners in 2008, that S&P 500 would beat the net result of a hedge fund portfolio. And that bet was made through Long Bets, which is a website and an organization that Stuart Brand and the Long Now Foundation created back in 2003. So that's a connection to our world, I would say.
Yeah.
I think in the beginning you mentioned about like Baillie Gifford and the thinking around like generational thinking. But in our world, it's quite common to say that you're a long-term investor if you buy a stock and aim to hold it for like 2 to 3 years. That's long-term. And in the book, they have chosen 10,000 years as their time frame, which is quite different. So why do you think they chose 10,000 years?
I think I think it comes back to this idea that they want to help people, or what they want to achieve is to change one's frame of mind. And if I say, we should aim for a 10-year perspective, that's actually, it might still be very hard in many structures, in many systems, be it politics or investment or business. But you can imagine it. You can think, 10 years, okay, I've lived more than 10 years. And I can imagine, okay, 10 years is something that you can come to terms with quite easily. So when someone says, hey, the long now, the presence that we should be concerned with should be defined as 10,000 years, I think it just helps get us out of our usual ways of thinking and help reframe our mind. And I think they have a wonderful line in the book where they say, where the authors write, a changing of a frame of mind does not occur in degrees; it occurs in jumps. And I think that's actually, I thought that was a fantastic point. Sometimes you need to rip yourself out of your common ways of thinking, and something like, hey, let's think on a 10,000 year basis kind of does that.
Yeah, I must say this book has really widened my time perspective, because reading about 10,000 years and realizing, okay, that is approximately the time of the human civilization thus far. And 10,000 years ago, it was an ice age, and we have had ice ages every 100,000 years for 1 million years. So now we're in this interglacial period, and in 90,000 years, maybe we will have another such period. We don't know, but it's like it's such long time frames, but it's actually also, in a way, it's not that long.
No, yeah, I thought their point on it being 400 generations, that left me stunned as well, where I thought that's much less than, perhaps it's because it's simply a smaller number than 10,000, but 400 generations doesn't seem that long in a way, if you think about it.
Yeah, if you count 25 years as one generation, which is, I think, also reasonable as they do, then we know so 200 generations ago they built the pyramids, and now how long have stock exchanges been around? Yeah, maybe 8 generations. These are my 16 people back in my history. We could sit in a room and talk about what has happened since they founded London and New York stock exchanges. It's quite crazy how short time we have had, for example, markets.
Yes, and I think that I think is very interesting, and I think another thing that I thought was then interesting is what one's reaction to that time frame is. As in, one reaction, my first reaction would probably be 10,000 years. Like, that's so long. What am I gonna do? Like, there's nothing I can do. But then when you think about it, and I guess the book makes that argument in a much more eloquent way than I will just now. But when you think about the power of accumulated change, accumulated actions, gradual change, you actually can feel a real sense of empowerment. There's very little you can profoundly change in 2 years, 10 years. But on a 10,000 year basis, you can probably change quite a lot, because you can start the process. Someone else will carry it on, or will have to carry it on, but you can plant the seeds, so to speak.
Yeah, I fully agree, and it's quite easy to think that now we're on a peak technologically or in life quality. It's really, can it get better than this? At least for us in the Western world, as privileged as we are. But then of course most of the generations before us, they've thought the same. Okay, now there's trains coming, and we don't think it's going to be possible to ride this because it's going to go too fast. And how will this even work? And now that's in the past for us, and it's so hard to imagine that. But probably in a couple of generations or in a few hundred years, people will look back at us and say, "Oh, we pity you. You lived like this. You all lived on Earth. This is, how could you do that?" Or I don't know. I mean, that's kind of opening up the perspective, I think, that this book really does. But coming back to the book and the Long Now Foundation, they like to encourage this long-term thinking and creating something that really is lasting. They have a list of 7 guidelines, and those include, for example, to foster responsibility, reward patience, and ally with competition. So from an investing point of view, what are your reflections on these guidelines that they set out?
Yeah, I think a lot of them ring true. And the longer I've been doing this, and I guess I'm still at the beginning of my career, hopefully, but the more I think about it, the more it's not necessarily about one's analytical capabilities or informational advantage. I think those things are table stakes, if you will. I think real lasting advantage in investing comes from having a structure set up that allows you to bring your analytical, your behavioral capabilities to bear and to be truly long-term. And that's just rare because it requires an alignment around the time horizon. And I think in most cases that's rare. I think that's why Baillie Gifford, for instance, was a great place to apprentice, because the time perspective was, it's still an institutional asset manager, it's still a business in that sense, but the time horizon was arguably longer than for many other institutional asset managers. And that's also why I think, that's how I think about Antheia AB and its advantages. I can, of course, I'm trying to get better as an analyst. I try to make sure that I have the information that I need to do my research, etc. But I really think an enduring advantage comes from having the right structure, having the alignment around time horizon. I mean, to put it bluntly, I think if Buffett was in a day trading asset manager, he wouldn't have the track record he has. It's very telling that he chooses that he very soon, after having been successful as a hedge fund manager, he chose to set up a structure that really enabled long-term compounding. I'm not saying it guarantees success, but it is a fundamental prerequisite to my mind. And so when I look at those rules like patience and so on, I think they all ring true. But for me, the biggest thing from the book, as well as the foundation, is actually that it's about having the right structure, the right processes, the right institutions, if you will, and the way they talk about it.
On the topic of, rewarding patience, I really found the following quote striking and maybe more timely now than when it was written by sociologist Elise Boulding. So it reads, if one is mentally out of breath all the time from dealing with the present, there is no energy left for imaging the future. And I just want to ask you, how do you handle the constant noise from social media, from news and from media and so on?
I think that's an ongoing challenge. I think, and it's funny how much it's shifted from, I don't know, 60 years ago when you could have an advantage just getting an annual report from the library or something, from the public library where it was filed, where information was scarce. It's flipped to the exact opposite, and you're inundated in it. I think it's hard. I think to some degree it's about thinking hard about your work environment, your rituals and your habits, your routines, and not starting the day on X, and not having a Bloomberg. Well, for instance, I don't have a Bloomberg in the office. I don't even have live prices. I mean, if I need to look up a price, I go on Google Finance. It's much cheaper than a Bloomberg as well. So I think it's in many cases about setting up your environment, your circumstances in the right way. That can, if you remove temptation, that can be very helpful. What I find actually much harder is the aspect of long-term investing and decision making, but having a score sheet all the time. So again, you can remove the temptation, but it's those swings and the volatility. I mean, you can read as much about being disciplined and so on and so forth, and reading all the various Buffett biographies and thinking, yes, I'm there for long term and I can sustain this. But some things you have to experience to learn, if that makes sense. And these are very visceral experiences, which to me also highlights that this is an endeavor where behavior and behavioral considerations are just front and center, much more than are you a better analyst than someone else, especially in the age of AI, I think. But yeah, I think it's in many ways about removing temptation, but you can never remove it all, if that makes sense.
I mean, you mentioned AI, and there are, all these different new technological breakthroughs that we experience over time. And you mentioned also that prices change, of course, on a second per second basis. But also, if we go back to this on having a really long-term perspective and 10,000 years, the reality in commerce and business is that things change, much more quickly. So not as quickly as prices, as stock prices, but really quick. And competitive landscape changes and so on. And I think the author writes about, the order of civilization, how the fast layers such as fashion and commerce stand for innovation, while slow layers such as culture and nature stand for stability. And I'm curious to know, your thoughts on this relating to investing, and how you, what's really long term for you, and having that frame of mind, as you mentioned, a long term perspective. But what does that practically mean for you in investing?
Yeah, I think that's why it's these 10,000 years. I'm not proposing, nor am I seeking to adhere to a 10,000 year time horizon when it comes to investing. I think the time horizon I'm subscribing to is more bound by, I guess, my lifetime, if that makes sense. So I think thinking in decades, or acting with a view towards how can we invest in something that could thrive for the next couple of decades if it works out, I think that's how I would approach the investing task in our case, in Antheia AB's case, if that makes sense. But it's an interesting question. I think for whatever reason, Nick Train comes to mind for me, or one of the founders of Lindsell Train, which is a very interesting asset manager. And I think he's one of a rare breed of really long-term investors, and the way he thinks about investing behind something like a Unilever or a Rémy Cointreau is fascinating to hear him talk about how he thinks about that and how he looks at these things. And I guess another takeaway is perhaps not just your time horizon, but also what information you seek out. And I love this term that I think was popularized or first coined by Nick Sleep, which is long shelf life insights. How can you identify this knowledge or seek knowledge or tilt your analysis towards things that you think have a long shelf life? And the reason I'm thinking of Nick Train here is I listened to an interview recently where he talks about Unilever, and he sort of talks about the benefits of it. He's not making the case that it's going to be, this is going to go up 10x in 10 years or something, but he's sort of saying, look, it's a rare breed of companies that has been paying dividends consistently for such a long period of time and has such a long staying power. And then he makes this interesting point where he says, the way we think about it is not actually about the current set of brands. It's really the question is it's been paying dividends consistently, but underneath there's been lots of change. The brand portfolio has changed completely, and as you would expect, some brands, some I don't know, will Marmite be as popular in the UK in 50 years' time as it is today? Will chocolate be as popular? We don't know. So it's fascinating because he talks about the businesses within Unilever that pay the dividends in 30 years' time will likely be completely different to the businesses today. So the way he thinks about the investment case is not to look at the market share of mustard or the growth prospects of, I don't know, Marmite or something. It's much more, is this an organization? Is this a management team? Are these successive management teams over the next couple of decades that can manage the portfolio well in a sustainable long-term manner? And I think that's where I get interested. So, and I think the pace layering for me is always fascinating when you focus more on, let's say, the infrastructure, the longer-term insights. I mean, take Inditex. That's a fashion business, so I guess a fashion retailer. And when you look at the earnings calls, etc., what do people focus on? Well, how's the trading been last month? And what's been the latest share price, not share price, but market share moves, or how fast has the US been growing in this quarter? How many stores have you opened? All of which is true. But if you then go back and think, what makes Inditex unique? What are the structural, almost the infrastructure aspects? Okay, they're set up completely different from a lot of other retailers. Certainly for in the past, when it was really a differentiated model. And to me, that's a long shelf life insight. It doesn't help you predict the next quarter's sales growth, but can you have therefore a view towards actually this business is more likely to succeed in the long run? I think so. And I think I take that away from pace layering, amongst other things. This idea of shifting your informational diet, but also the focus of your analysis towards these long shelf life insights that concern infrastructure as opposed to fashion, as they would say in the pace layering system.
I think one thing that I'm quite curious about is this interconnection between business and nature. Myself, I have a degree in environmental economics, so I have a bit of background in this. And a striking example from the book was this example from the company Maxam in California, who cut large forests of redwood in the 80s and 90s as they were not yielding enough. And now, of course, I mean, the whole population there is left with no trees and nowhere to walk. And I just think that business has been quite bad in acknowledging actually or realizing the possible profits from having people like walking in forests and sport fishing in lakes and seas and so on. And the author makes the point that business has too short a time horizon to take the larger future seriously, and that therefore governance must do it. Is this in line with how you view the role of business, and do you have examples of companies like embracing the really, really long term?
Yeah, I think that's fascinating. I think governance definitely has a place in that, because even if there are some, perhaps even many examples of very long-term thinking businesses and entrepreneurs, there's still many who are under such pressure of various kinds to act short-term. So having a governance to sort of see to it that a long-term perspective on, let's say, having forests, etc., is enforced, I think makes a ton of sense. I think what I find interesting is if you have a short-term horizon, many things become zero-sum games, and we can bring in nature as well, of course, and perhaps we should. But if I just more narrowly think about businesses, I would say if you're trying to maximize the value of a business over the next couple of years, what do? You probably you probably work your employees very hard. You don't want to pay them too much. You want to overcharge your customers. You don't want to provide a great service. There's a fundamental misalignment then, and the business becomes extractive, and that can work really well actually for a surprisingly long period of time, because sometimes these businesses are very entrenched. But I would much rather, for financial and I guess also ethical or personal purposes or personal motivation, invest in businesses where there's a fundamental alignment. And the wonderful thing to my mind about having a long-term perspective is that it enables you to create a positive sum and not gain, but a positive sum system. As in, if you as a business leader think about how can my business thrive over the next 20 years, you will take into account externalities, or you're at least much more likely. If you think on a 10, 20 horizon, can you screw your customers? Not really, because they're going to react and respond to that policy. You will think very differently about training employees, investing in your employees rather than extracting value from them, and many other things. Do you then think about, you probably have a very different attitude towards governance. Are you combative, or are you saying, actually, if I want to be around in the long term, I kind of need to have the license, the social license to operate? And I think the very best businesses in the long run, most of them share that, have that. I mean, people talk plenty about Costco, of course, but I think that, for instance, is a prime example. They play their employees really well. They really put customers front and center, and they've been thriving for a long period of time. It doesn't guarantee success. I'm not saying that, but this business isn't about certainty. Investing is really about tilting the odds. So I think that's that alignment, creating that alignment between the owners and of the business, the shareholders, let's say, the management team, the employees, the customers, and perhaps even the backers of the owners, as in most shareholders are managing money for someone else. So the agent, principal, etc. If you align on a long-term horizon there, I think amazing things can happen.
I think very related to this on responsibility and this long-term thinking, the author writes that while 20-year forecasts are a complete waste of effort, 20-year scenarios are common and useful. Now, many companies, they don't have 20-year forecasts even. But is this kind of scenario thinking? I mean, at Redeye, we use a lot of scenario analysis. We try to predict different types of scenarios that could play out. Is that something that you think of as an investor, and that you also try to incorporate with the type of business that you engage with, that they should have that?
Yeah, I think I do try and think in scenarios. I'm not sure I'm too fond of being too formalistic about it and having to spell it all out, but certainly the mindset of not being wedded to a particular forecast or a specific future, I think makes a lot of sense. And for me, one of the takeaways is forecasts are really about finding answers. You're trying it's about finding answers. A little bit like explanations are about finding an answer, saying this is what happened, and I know these were the reasons. And I think the natural tendency is to do that because we seek certainty, and it makes us feel better if we think we found the answer. But what I've learned, I guess, or what I'm trying to internalize more and more, is that I'd much rather than forecasts that have scenarios and think, rather than arriving at an answer, I want to arrive at a better question, if that makes sense. And likewise, when it comes to the past, I think I'd much rather get away from this idea of explanations and embrace more the idea of narratives. Narratives are a little bit similar to scenarios where you say, this could have happened. But again, the idea is not to arrive in an answer, but to make you think more about, yeah, but it could also have happened this way. What might be the crucial factors here? So that to me is a big takeaway. And I guess that's what you're looking for in management teams and entrepreneurs as well, who combine this idea of having a vision, perhaps, something to rally their staff, the organization around. I think that can be incredibly powerful. This creating a motivation beyond, we will increase earnings per share by X% per year. I think that only goes so far in terms of fundamental motivation of people. But marrying this with thinking on their feet and adjusting their views and remaining open-minded, broad-minded, I would say that's probably quite important.
Now we have talked a lot about the lessons from the book. Is there anything else that you would like to bring up that we haven't covered so far?
Well, one aspect that I thought was interesting was this idea of fault-tolerant systems, how their fault-tolerant systems tend to be small, because then corrections can be local and quick, but also slow, so that mistakes can instruct the system rather than mistakes cascading if the response is too quick, and so on. And it has a bit of a personal flavor to me, because I've moved from a place, Scotland, which has more devolution or has more devolved powers than it had in the past. But the UK remains a very centralized country, centralized political system. And I've moved to this fascinating place called Switzerland, where it's small overall, geographically speaking and population-wise, but it's also even smaller when you then think about where the decision-making power lies, which is mostly with cantons or even the local communities. And that's been fascinating to observe and also think about in this context of fault-tolerant systems.
I think this is a good segue into your current role and what you're doing at Antheia. Maybe you can talk a bit more about how the investment philosophy actually is and how this has developed more in detail.
Yeah, that's a good point. I mean, I would say it is all evolving, and partly it's enabled to evolve because, as I said, Antheia AB has the great fortune of not managing any outside capital. And that allows for a fundamentally higher degree of flexibility that we are keen to embrace. But I would say the way I think about it is really, I think success is predicated on doing something that others cannot or will not do for a variety of reasons. So, and I don't mean to suggest that working hard and getting better at analysis and understanding yourself, being able to deal with discomfort or the pressures of long-term decisions in a short-term world do not matter. I think they matter a great deal. But I think without the right structure, the right setup, you cannot succeed because you can't be different. So to my mind, the crucial question that certainly we are asking ourselves, or that I'm asking myself, is really, what are the sort of unique capabilities that Antheia AB can lean into? And I would probably put forward a couple. One is the long-term mindset. We seek to commit capital, equity capital that are built or into investments that are built on a shared purpose of multi-decade compounding. I think that is actually quite rare. So that's good. Then I think there's concentration. We really try to invest in a handful of exceptional opportunities. And I would expect in the long term a small number of outliers to represent the bulk of the portfolio and the performance. And coupled with that, I think what's also unusual is we're trying to adopt an opportunistic mindset. We don't have to deploy capital. There's no pressure if there's nothing to do. And that certainly feels quite different from institutional asset management, I would say. I mentioned the flexibility. We're trying to embrace the whole spectrum of opportunities, from private to public, from being a minority shareholder to perhaps being an active shareholder with a larger stake. Then the idea of stewardship, I think, is important. I think Baillie Gifford has been very instructive in that and how they think about the partnership itself, but earning the right and the responsibility to be a steward of the businesses that we part own or own. I think that sort of creates a certain ambition for excellence, because you want to. It's not a right that should be given; it's a right you earn. The ownership comes responsibility. And lastly, I think we've talked about this already in various points, but this idea of alignment, of not having third-party capital, but being aligned on time horizon is to my mind, incredibly powerful. And so these are the things that we're trying to lean into. And what's the manifestation these days? It's about being a long-term owner in public and private companies, but also, doing things that are perhaps a bit unusual, like trying to get permanent holding companies off the ground. That is perhaps something that very few investors, due to mandate restrictions or time horizon restrictions, are unable to do, or because they need an exit in a couple of years. So we're trying to find things that if you think about the Venn diagram, what are the structural capabilities that we're really good at? What are the personal capabilities? Where does that overlap? And what type of investments are therefore the most promising ones for us? But it really comes back to a long-term attitude. And yeah, that's what I would say. It sounds a bit abstract, but I guess the point I'm trying to make is that this is how I start to think about it, or we start to think about it. And then these specific investments are an outcome of that.
And having your long-term attitude, how do you try to, or do you try to, like, sort of, engage with management and try to get them to become more long-term, or is it really that you try to find the companies that already are long-term?
I think so far it's probably been more the latter. I wouldn't want to, back to our flexibility, I wouldn't want to exclude the possibility in the long run of trying to change mindsets, but I think certainly if I think about public markets for a second, I would argue you can contribute by being a long-term investor a lot. I think one of the most remarkable things that, for instance, Jeff Bezos has done, and he's obviously done many remarkable things as he was building Amazon, but the thoughtfulness with which he's tried to curate a shareholder group that supports his long-term vision is I think of tremendous value. And I think a business that has a bunch, or perhaps just one or two dominating shareholders that really think long-term, almost confers an advantage in itself. Sweden, of course, has many such examples. If you take the most obvious one, the Goldberg family, and the positive impact that they've had on many of the companies that they own. They think in terms of generations of family, and I can only imagine that this is a huge boon for a company like Atlas Copco and the management team to know that they're being supported in the long term, as opposed to having to deal with, tourists on the shareholder register, if that makes sense. And I think that comes back to the idea of alignment. So, so far, I would say that the companies that we own, and or that Antheia AB owns in the public space, but also in the private space, I would say we try to support people that think long term, because I think even that support there's still so much to do in terms of supporting them in that quest, and having that fundamental alignment, I think is very important to us.
And as I mean, both you, me, and Eddie are investors, so to speak, and one of our key roles is, of course, is to analyze businesses, and with that, you mentioned that it's a lot about getting, coming up with the best questions to really get to grasp with the truth. And with your approach, meeting management becomes quite important, of course. And in the book, we read about the Goldberg rule. And what he says there is that when a manager comes to me, I don't ask him, what's the problem? I say, tell me the story. This way I find out what the problem really is. And that's from Abraham Goldberg, head of a chain of grocery stores. And with that, I'm just curious on your take on that, and also what's your way of getting managers to tell you about what really matters?
Yeah, I think there's a couple of things in the Goldberg rule. One is the idea of obliquity, and not just saying, what's the problem? Tell me precisely what's the problem, because you're likely to miss the actual problem. So approaching these things in an oblique manner, I think is very helpful. And that can take many forms, but I'm actually, when I think about meeting management, or when I do meet management, of course, I might ask some factual questions, especially if I'm at the beginning of my research. But what I think is really far more interesting and far more fruitful in terms of developing these long shelf life insights is really understanding how they think and how they think about approaching a problem rather than the problem at hand. And we can use that as a example, and we can expand on that. But it's, to my mind, it's really about how they think, and getting a sense for that. And I have a feeling I can get, or I hope, let's say, that I can get a lot better at this, asking questions or having these conversations. But I would say it's approaching it in an oblique manner that is probably most helpful. Like culture. I mean, if you ask them, do you have a good culture? I mean, what are they going to answer? But it's much more interesting to perhaps pick up some things when they talk about something else that can be very telling. So finding these opportunities for reveal, I think that's very exciting. And I need to think harder and longer about how to create these questions or these situations where you can see those revelations, if you will.
One thing I thought of when you answered that was that in Sweden we have this region Småland, which is famous for both entrepreneurship and having a great work ethic. And I read quite recently about this company who where employees quite often, if it's needed, they come into the office on a Sunday and ship this order that needs to be delivered, because that's the ethos that they have. And that came from like an interview with much lower down than top management. I read that, and it's just an example of you need to read, you need to talk to employees, and you need to read stuff that others don't read, which is maybe not, in business magazines or so, to get the grasp of what a culture really is and what it means.
Yeah, and I also think often anecdotes are sort of derided as non-scientific, and you should look at the data and so on. And I listened to an interesting podcast, the Rick Rubin podcast, Tetragrammaton, or whatever it's called, with Rory Sutherland, who's, I think, the chairman or a chief executive at Ogilvy Mather, the advertising agency. And he sort of said, anecdotes are actually fantastic because they reveal a lot. To your point that stories can reveal a lot. And then reasoning, I think when it comes to these things, like trying to get a sense for a culture, which is really important as a long shelf life and with a long-term horizon. I think you're more likely to get to not an answer, but get to a view, let's say, when you try to approach it inductively, as in you look for the small things that might allow you to draw conclusions, or perhaps not conclusions, but help you in your scenario planning on the overall organization. So, picking up, there was to give you an example, I had the chance to meet with Peter van der Does, the CEO and co-founder of Adyen, the Dutch payment services provider. And they are not the lowest cost provider in their space. They're actually quite confident in saying, we have a service and a product, a technology, or whatever, that really is qualitatively better than others. And we should be paid for that. But it was fascinating. He talked about things like the toilets and the kitchen areas in the office being clean and high quality, and the appliances, because he said, we are a high quality business. We're selling a high quality service. So for us, if our offices were ramshackle and the toilets were not clean and the kitchen was a mess, that would be a real problem, because to him, it signifies there's something wrong. There needs to be a common ethos of, we are, providing a high quality service. We act in a high quality manner. What's the JP Morgan quote? Like, doing business, a first class business in a first class way. I think there's a certain style or attitude or mindset that should permeate an organization. And then when you pick up on these things as an investor, as a management team, actually anecdotes become quite interesting and quite powerful and informative.
So I guess you went and checked the kitchen and the toilets.
Yeah, and it's a balancing act, right? You don't want massive water fountains and gold-plated stuff everywhere. But yeah, I had the chance to visit the offices. They were nice, they were not too nice, and they were, clean, and yeah, it was good, I have to say.
I think we have discussed this point before about Tom Murphy and the way that he, decided only to paint one side of the building, and it just, the point really I want to make is that in some businesses it's important. Cost is really important. You need to be the low cost provider, and that's everything you should focus on. In other businesses, it's having maybe a quality approach or something else, but it just really depends on the circumstances for that specific business.
Precisely.
Moritz, I also want to ask you about, do you have any sort of limitations around sectors or geographies that you can invest in?
No, ultimately it depends on the board, whether they take up my recommendations, etc. But the idea is really to, as I said, focus on exceptional opportunities, not giving in to the pressure, the tendency to just deploy for deployment's sake, but otherwise, and be focused on equity long-term investment in its various forms, but other than have flexibility. Now, will there be areas where over time they emerge as areas of focus? For sure, but a priori, the idea is really to be very flexible and not have too many constraints in this respect, but then have very strict constraints around, we're trying to find investments, relationships, what have you, that can go on that share this purpose of multi-decade compounding. And that's actually a very strong, strict filter. I think if you do that, then a lot of things are excluded right away. But in other respects, there's no constraints, no.
That long-term mindset, and as you mentioned before, we as investors always have this scorecard. I'm curious how you and Daniel and the board actually evaluate your work and if you are successful at Antheia.
Yeah, that's a really good question. I think it's probably for the board to answer, if I'm completely honest. But I think it's it's an interesting conundrum, of course, because especially in investing, because you can measure, if you wanted to, you could measure every minute, or even at even smaller increments. But ultimately, I think it comes down to, at the start of the relationship, to have a shared alignment around time horizon, and I guess from both sides have an advance of trust. But in the long term, of course, I think results do matter. I mean, the long term doesn't mean that results don't matter, and you can just do whatever you like for decades. But that is a good question. But as I said, ultimately, I think I'm probably not the best person to answer.
And I mean, a follow up on that is that even, I mean, you can like sort of underperform, so to speak, for a couple of years and still have a good process. And what I come to there is that it's really about the process. So how do the board and Daniel evaluate your process and your thinking?
I think, of course, they can observe it because, as I said, I'm the one who does the research, comes up with the ideas, and then the final decision lies with the board. I'll have a recommendation, but their decision lies with the board. So they see, if I, let's say as an example, there was underperformance, and all of a sudden my process would differ completely, or all of a sudden I'm looking for or proposing opportunities that are clearly just designed to prop up numbers for the next 2 years. I think that's actually in that way pretty obvious and very telling. And I think we're still at the beginning of this relationship. I've been doing this for 2 years. But I'm absolutely certain that there will be periods of underperformance, probably quite significant underperformance, given the nature of concentration. And I think those periods will be where, ideally, real trust is built. Again, it doesn't guarantee success. I can stick to my process. I can be wrong. As I said, I think that being long-term doesn't guarantee success. It's just a prerequisite. It's a fundamental prerequisite. But I think that remains an open question. But I think if you all of a sudden become very short-term, well, then you've removed this fundamental prerequisite, and then the answer is actually pretty clear. So I think those periods will come. I don't live under the illusion that they don't come.
From what we can hear, it sounds like you have the right prerequisites to outperform in the long term. Definitely, you're thinking a lot, you're reading a lot, you have this multidisciplinary mind, but still we have biases that can inflict, and I'm sure you have thought a lot about it. So what would you say is your most common bias that you grapple with?
I think the search for long shelf life insights is the right one, the right approach. But of course, it comes with a trade-off, as in, I'm probably, therefore, more likely to discount shorter-term signals that might actually be quite revealing, not just of the short term, but also the long term. Because I do try and tilt my information diet towards longer term stuff. I'd much rather spend an hour or two with management or with an industry expert talking about the business, the industry overall, than go through the quarterly reporting with a fine tooth comb. But I look at quarterly reports to be very clear and read the transcripts and whatnot. But it's much more with an attitude of, not scanning them, but coming at it with an attitude of, okay, the default is actually most of the information here is not valuable. But I can think of examples in the past where that was a big mistake. So I think that's the flip side of the long-termism. And perhaps it's less of a, well, perhaps it's a bias as well, but I don't really think that speed of reaction is an edge for Antheia AB. Partly that's my personal disposition, but also partly that's how the decision making is set up, as in I propose and the board decides, and it's not designed so that you can react in a moment's notice to something. And again, that's, I think, the right attitude to have for long-term compounding. But the flip side is also, is it more likely that things that haven't worked out are too long in the portfolio? Probably. Like, that was certainly my experience in Baillie Gifford. We almost always sold too late. But this sounds harsh, or perhaps hopefully not too flippant. But I almost look at it as a feature, not a bug, if that makes sense. But that doesn't mean that those mistakes don't hurt, and that doesn't mean that you don't want to work on them. But yeah,
it's much more common that you hear that someone sold too early. So in that respect, I think it's clear that you think really different, and you do things really different from the rest of the investing world.
Definitely. And I think to wrap up here, some of our listeners, they might be wondering what happened with this clock that they were going to build in the book. We mentioned in the beginning that the book came out in 1999, so 25 years has passed. What do you know what has happened?
You know what? I haven't actually looked up. The last I heard was that Jeff Bezos is also one of the benefactors of the foundation. I think he provided some land. Is it in New Mexico, Arizona, or Texas, somewhere in the south of the United States, so that they could use that as space to build the clock. But that's the latest. To my great shame, I've not kept up to date with the clock project, but then it's a 10,000-year project. So checking in every 10 years is probably long enough, or short, is frequency-wise okay.
Yeah, probably. Yeah. I had a look as we were going to record this, and in July 2024, the clock is still being assembled deep inside a mountain in West Texas in the US. So the work continues, but no completion date has been set.
Great.
So we'll see. Maybe we can catch up in a couple of years or decades and see where they are and where we are. But let's shift focus to the last part, the book part and the reading part, because this is a book podcast and we'd like to wrap up with some questions on that. And what we haven't talked about the book is that in the Clock of the Long Now, they want to create also a 10,000-year library for humanity that they would like to store probably in this mountain as well. So if you could choose one book to add to this grand library, which one would it be and why?
I didn't expect that. I actually bought some books that they mentioned that they would add to the library. There's a textbook on archaeology that I have yet to read, which sounded quite interesting. But that's a good question. That's a good one. Okay, you know what? I'll give you one that is actually, perhaps there can be an investing section in this 10,000-year library. I would say one of the best investing books that will stand the test of time is, need to look up the name of the author, Benjamin Roth, The Great Depression, A Diary. And you could say, hang on a second, this really just captures a 10-year period, because the diary that Benjamin Roth wrote was between 1931 to 1941. But I think it's such a rare thing to have an investment book written in real time, not with hindsight, that it should belong in the 10,000-year library. And just to provide a bit more background, Roth was a lawyer in small town Ohio, and he sort of picked up the pen in 1931 because he thought this is a really interesting period in the nation's history. And so I'm going to sort of record my thoughts on business, investing, writing. And I mean, it's a gold mine on just going through the experience of something like the Great Depression, and how different people were, or different groups of society were affected differently. But also his writing on investing, like, is now a good opportunity. Just the idea of, in hindsight, it looks so obvious. Yeah, you want to buy when there's blood in the street and so on. But actually, just how much uncertainty there was, and the setbacks within that, and just how messy reality is when you strip away the sort of hindsight. So I think I think it would make a fantastic addition to the library.
And is there any book that you would like to read that you don't think exists today?
Oh, wow. I, again, didn't see that one coming. Is there any book that I'd like to read?
Maybe I can rephrase it as, is there any topic within investing? Because, I mean, there's so many investing books on different subjects. Is there anything that you think is sort of uncovered as of today?
I'm not sure. I think actually the best investing books are not investing books. Again, I think it makes total sense to read the Löwenstein book on Buffett, and even some textbooks, I guess, can be helpful. But my experience is the most interesting books on investing are the ones that are not official investing books. Like one book that I think is fantastic in general, but also has a lot in there about investing, is Rick Rubin's The Creative Act. Because I think in investing, there's this tendency to emphasize financial numeracy and Excel skills or spreadsheet skills and hard analysis, when actually it's also just an incredibly creative endeavor. And if you want to think differently, you would benefit from reading the book. And so I think about it really in that way. So, but what, I don't know. It's what topic? I guess anything. A little bit perhaps like the 10,000 year thing. What are other? I'd love to read things that really take me out of my frame of reference, my frame of mind on certain things. In this case, with the Clock of the Long Now, it's about time horizon, but I'm sure there's many other things. Like perhaps there could be a fantastic book on relationships and the sort of common frames of mind that one adopts in that subject area or in that area of life, and really take you out of there. So anything that really is, radical and changes your way of thinking would be wonderful. And I guess I'm always looking for those types because, that would be great.
Moritz, thank you so much for coming on Investing by the Books podcast to talk about this wonderful book that you chose and share your insights on investing. Is there something else that you would like to add here before we finish up?
No, I really enjoyed the conversation, and it's been great.
Wonderful. And lastly, where can our audience follow you and your work?
So I have yet to create a TikTok, Instagram profile. Well, I should say I'm very unlikely to do so. The best place is probably LinkedIn. You can find me there, and the direct messaging opportunity is open. So I'm always intrigued to get to know people who share the same time horizon, and so just reach out, and that would be my point. But we don't have a website, so I can't really point you to a website. So I think LinkedIn is your best shot, if you will.
You're really focusing on what matters. Thank you so much, Moritz.
Thank you.
Thank
You're
you.
welcome.
Thank you for listening to Investing by the Books, a podcast by Redeye. Follow us on Twitter at @IB_Redeye and email us at ib.podcast@redeye.se. To improve, we'd love to hear your feedback, so please rate and review us. Notice that the content in this podcast is not and shall not be construed as investment advice. This information is meant to be informative and for general purposes only. For full disclaimer, visit redeye.se. I'm your host, Eddie Palmian, and until next time, I sincerely wish you the best of luck on your journey through life and investing.